Hey all, welcome to ShareTreck. This is Raj here, and today's Saturday edition, 30th of July 2022. In today's video, I'm just going to talk about a bunch of things that I noticed last week, both positive as well as negative, that have shaped the week for us. And we're going to examine what's going to happen going forward. In this process, I'm going to be talking about not only corporate events, but also economic events and geopolitical events. We'll keep it short. We'll keep it to around 20 minutes at the most. So let's get started. Let's talk about what a great week it was. Nasdaq was up almost 16 points. That's almost 5% increase over where it was the previous week. This comes on the back of multiple stimulus. And as I promised, here are a few that I can think of that made the markets go up. The first is the lower oil prices for more than 2 weeks, and also the poor results from Walmart and a few other companies, which led to the feeling that potentially recession is almost here, or much closer than we thought. And that definitely, I believe, influenced the Fed in their approach towards interest rate hikes. Also, 70% of companies that have reported their earnings so far have beaten estimates. While this is a bullish factor, however, it should be noted that many of those companies said that they foresee a difficult third quarter, and some of them definitely saw a sharp fall in their share prices due to those statements. So that indicates that going ahead, the market is going to be a bit soft. So that was also another factor that fed into the sentiment that Feds had when they came for the rate hike discussion. We also have another factor that we do not see on a daily basis in our analysis. That is a weakness in the US housing market. The houses are sitting in the market for longer. There is more listings available than there are home searchers. And also the increasing mortgage rates has made it difficult for people to qualify for mortgage. So mortgage application has dropped, mortgage approval has dropped. So overall, there is a lot of weakness in the US housing market waiting for a trigger point. And such a trigger point could have been a stronger interest rate hike. So that's another factor that we have to keep in mind. Another hidden factor that we do not see on a daily basis is that we don't have a visibility into the Fed's balance sheet tightening act. We just look at the interest rate hikes. That's where our prime focus has been. But we should note that from this month onwards, the Fed is tightening its balance sheet. So it's going to stop bond purchases for a certain extent, and it's also going to stop renewal of mortgage-backed securities that expire. Both of this means that liquidity is being sucked out of the market, and when liquidity gets sucked out of the market, you have demand destruction. So that pushes us closer towards a recession, greater level of unemployment. So those are the factors that tend to make the economy a bit soft, and therefore induce the Fed to be more dovish in their outlook. So as a result, when the Fed came out and had their rate hike conference, they announced the rate hike of only 75 basis points, which was mostly factored into the market, and people had already considered that and baked it into the price. And they also included a bit of dovish statements of future rate hikes, which provided cheer to the market. The progress of the CHIPS Act, also the bill that promotes manufacture of silicon chips within US, also provided support to the market, because it helps the American chip building capacity to be increased, and around $52 billion, if I'm not mistaken, has been earmarked for this particular bill. And it turned out to be a shot in the arm for the market. Over and above that, we had a bunch of earnings that boosted the market. The first one is Tesla, the second is Apple, the third I would put it as Google, and fourth as Amazon. All of them definitely did influence the market in a very positive way. Meanwhile, I can think of at least 4 companies that influenced the market in a very negative way. The top among them being Walmart, which really disappointed the market. Then we had Snap, Meta, and Roku. All of them disappointed the market and pushed it downwards. And globally, here are a bunch of stimulus that are in operation right now. The strong dollar is becoming a major concern for Asian countries that are tackling inflation, as energy purchases are dollar denominated. This also creates a political problem for them if inflation continues to persist, as it's understandable. Now, turning on to China, China is continuing to pursue a zero COVID policy that has put major cities into full or partial lockdowns. Large Chinese cities, including the major financial hub and manufacturing hub of Shanghai, were put into full or partial lockdown during this period. And this has caused a lot of problems for many American companies which have got production facilities in China, top among them being Tesla. So this is likely to be a continuing feature going forward. China's once booming property market is also in a deep slump, and home sales have fallen for 11 consecutive months. And several Chinese developers have halted the construction of homes that have already been sold because of concerns over cash flow. Meanwhile, this has prompted a lot of home buyers in China to threaten to stop paying their mortgage until the work restarts, the construction works restart. So this has become a catch-22 situation out there. And there is a growing consensus among economists that China will not meet its 5.5% growth target this year. And those of you who have been following global growth rates, you would know that China has been growing at a much higher rate, and 5.5 was a very low bar of growth target for China. And the fact that China can't even meet that low bar is a matter of concern for the global economy and shows a bit of weakness in the global economy. However, turning on to better news, we have some good news from Singapore, which always demonstrate good governance practices, and it's a model for many countries. Despite not having much of land and area, Singapore has been pioneering its efforts towards being more energy efficient and as well as being more green. Singapore is turning multiple story car parks into farms. And currently, Singapore imports 90% of its food needs. And these small farms supply up to 400 kilos of produce daily. And this production rate is only set to grow. Because apart from car parks, the farms are also finding place on rooftops. And there are still many rooftops in Singapore that can be converted into farms. And I see that not only will it reduce their food dependence on imports, but it's also going to reduce the overall city temperature, at least make a little bit of a dent out there, because bare concrete roofs are now going to be greenified, and that means that it's going to be less radiation of heat. And also the second contribution from here would be that more green spaces mean more oxygen production. So both ways it's a win-win for Singapore. Let's watch this space further and see how much they can make progress and whether it is taken up in other parts of the world. So it can definitely help boost our environment efforts. In another positive news story, I'm taking it from India. India has reached a significant milestone in terms of population having access to internet. 7 years ago, India had only 19% of the population having access to internet. Today is 60%. This means that even vegetable vendors and villagers using smartphones and paying for purchases using the smartphones. This was something I couldn't have imagined when I left India almost 25 to 30 years ago. But at that time, we used to wait for getting a landline for around 15 years. And the wait list to buy a car was around 10 years. So those kind of situations are prevalent in the much earlier part of Indian economy. And we had just started getting out of those because the country had gone into more of a open market kind of a economy. And we had some new car manufacturing companies, and cell phones were introduced, and things were getting slightly better. But I wouldn't have imagined that we would have 60% of the population already on the internet by now. And this is thanks to the proliferation of smartphones. And this means that the overall e-commerce business can have a much better foothold in the Indian economy and contribute more towards its GDP. Overall, a positive development. With that said, I think I would like to go to the TradingView platform and show you what the market did last week and where it's likely to go next week. So here we are on our TradingView platform. I'm looking at the indices. You can see US oil. I put it on a weekly chart so that we can see a pattern out here. You can see US oil, after dropping, has always consolidated sideways before dropping further, and it is the same action going on here right now, in my opinion. So next week we should see further drops going in there, and that's what I'm rooting for, because both the MACD as well as the momentum are looking weak. And with that said, let me go to QQQ. If you look at QQQ, we have a green candle for this week, which shows that we have been able to break through above some resistance levels, key resistance level of 306.53, as well as we crossed the 9-day exponential moving average, and we were supported by this minor resistance, which happens to be at 297.79. So these are our catalysts, and the 100-day exponential moving average is our next resistance out here. MACD is looking great, momentum is also looking great, and just about to move into average. So everything is looking good for QQQ. And this is a weekly view we are looking at. And if you look at S&P 500, S&P 500 had got a much bigger gain than QQQ if we look at it in terms of the size of the candle. And we have a bullish MACD, and we also have momentum just crossing over to the average. So S&P 500 is also looking good and poised for further growth. If you look at IWM, Russell's index, that has also done pretty well. Again, it's crossed over a bunch of resistances and also converted the 200-day exponential moving average into support. MACD is also bullish. Momentum is also going up to average and continuing to move upwards, and that's looking really good for me here. Dow Jones Industrial Average, also the same story out here, both on MACD as well as the momentum. And when we look at the VIX had the biggest drop in this week, and it has come very close to our 20 mark, which we use as a benchmark point, after which we can start swing trading and day trading with much lesser risk in our on our side. So with that said, let me look at the QQQ and just give a overall perspective, because in the Nasdaq we can still see that we are in a bear market and we are just doing a rally in the bear market. And as past rallies that have happened in the bear market, they hit the diagonal line of resistance and then they come down. It has happened multiple times, and this rally could also be one of those. So until we conclusively cross over this diagonal red line, which is likely to happen next week, we cannot say that we are in a bull market yet for Nasdaq. However, when you look at S&P 500, we didn't have such a such a bear channel out there, so we are definitely looking bullish in S&P 500. Likewise in Russell's, likewise in Dow Jones, and likewise on when you look at the VIX, it seems to show that we are continuing to drop the volatility further. So with all that said, that could be a good indication that next week we are likely to break through this diagonal line of resistance, but I will count that only when it happens. So I'm going to hold on to that prediction until we cross this diagonal line of resistance, after which I will not hesitate much to say that we are into a bull channel already. So with that said, I'd just like to look at some of the big shares that move the indices. So if you look at Google had a big gain, but if you look at the weekly situation out here, we have not gone past anything higher. We are just consolidating sideways on a weekly basis. So we still need to see more bullishness to come in here. And Google is way far away from its peak of 150, which it had at some point of time. It's only at 116, so there's a long way to go. We still have the 20-day and the 50-day exponential moving average that needs to be overcome when it comes to Google. Of course, Microsoft shows a much better improvement as compared to Google because it consolidated earlier, but last week it definitely did break out, and it has converted the 20-day and the 50-day exponential moving average also into supports, and MACD is bullish and momentum is also high. So I think Microsoft is looking great. And if you look at the other company that makes influence on the indices, I would say Amazon. Amazon is trying to cover the gap that we have here. Let me go to a daily chart so you can see the gap. You see this big gap here that needs to be filled. When we came down, we really had an unsystematic, very sharp drop, and that left a gap out here. We have not yet recovered the gap, and we have created a new gap on the way up. So this is messing up the charts for Amazon a little bit because this gap will have to be filled up sometime soon, which means that Amazon is going to revisit the lows again. That should have been a gradual hike, but unfortunately for us, this is how it happened, and it's a doji candle out here for the week. So we'll have to see which direction it takes. And again, 200-day exponential moving average is also a very strong resistance for us. So next week we'll have to see what Amazon does. So Amazon is not yet out of the woods, and that will definitely affect the indices when things start moving. And if we look at Apple, which is another biggie, Apple has created a gap out here while moving up. These gaps are always considered irregular moves. so they need to be filled up. So there is a potential for Apple to come down again, fill this gap before it moves up. So this is also going to influence index the next week. So we could see potentially that the index might end up being near overbought, and it would need some amount of cooling. And the cooling might come from Amazon and Apple. And let us see which other share out here could make a difference. We have seen Google, we have seen Microsoft, we have seen Amazon, and we have seen Apple. And I would just like to look at the automobile side and look at Tesla. Tesla again has notched a really good gain, and the progression is really smooth for this bull chart out here. Really happy about the way Tesla has progressed. And we have a bullish MACD, but we are coming close to overbought. So Tesla is likely to mirror what's happening on Nasdaq, and Tesla might also move sideways and potentially down, and look at the support here before moving up further. Now, all of these will definitely have an impact on the overall index. Now let's go and have a look at genomics. I'm going to start the genomics watch list before I proceed further. And if I look at Verve, Verve is the biggest loser from last week, and it has lost significantly. This is the candle for the week, and we started somewhere around 27.63, and we went all the way down to 23.45, and we closed the week on 24.62. And in the process, we have broken down below the 200-day, 9-day, and the 20-day exponential moving average respectively, and we have broken down around at least one of the horizontal line of supports that we had, and converted that into a resistance. But we still have this diagonal line of support which forms a bull channel. So I would say that there is still hope for Verve, which has got a lot of things going in its favor, along with Beam Therapeutics. And base editing, I think, is much less riskier than CRISPR-Cas9, as emerging research evidence continues to show breaking double strands seems to be much more riskier and carcinogenic, whereas base editing seems to be much more safer from that point of view. So I expect both Verve and Beam to be doing better going forward. But we do have a situation here where we are coming dangerously close to the diagonal line of support. We should also remember that the price hike that we saw in Verve and Beam was much more steeper and unsustainable. Sooner rather than later, it had to give up. And we should remember that we were overbought for a while before cooling down. So I'm expecting that we're going to bounce back from this average momentum and move our way up when we go into the next week. Invitee is down minus 4.52%, and we can see that both the MACD and the momentum indicator are very weak, and we are still below our line of resistance. So I see a weak chart for Invitee. However, the earnings, which is due on 9th of August, is likely to make a change. For that, we have to hold on for one more week. Let's look at Editas, which is down minus 2.95. We have the earnings coming up on 3rd of August, and therefore that is likely to be a catalyst for Editas. And we still are on a bull channel, so until we break down below the bull channel, I would not worry too much about Editas. Bluebird is down 4.03%. We have earnings on the 4th of August. I have already published my Q2 earnings estimate. If you have not seen it, please check out on the channel. There's a separate video. There's a bunch of videos out there. Bluebird is one of them. The other companies that I have published Q2 earnings outlook is for PACB, which is again reporting on the 3rd of August. And I've also published one for Verve. I published one for Editas, which is reporting on the 3rd. I published one for Bluebird, which is reporting on the 4th. I think it's on the 3rd. The date here is wrong. And yeah, you could have a look at all of those videos on the website and check it out. I'm going to look at CRISPR Therapeutics next, which is again on a bullish channel. It's got a diagonal resistance out here. I'm just going to drag this out a little bit and put it out here. This becomes a bullish pennant again. So if we continue to come down here, I would end the pennant somewhere out here, because this is where we have got support, and the support is validated at least in 3 points out here. Or maybe I could just take it from here and pull this out. So we have a bullish sword kind of formation out here, and we have this diagonal line of support. So I'm expecting that sooner rather than later, CRISPR is going to break out from this bullish pennant. That's what I'm looking forward to. Right now, the MACD is indicating a very bearish setup. The momentum is still above average, so I'm hopeful out there. And then if you look at ARGG has lost, but overall it has been gaining. It has fallen below this diagonal line of support out here, so it's fallen out of a bull channel, and it's treading along this line of support that comes from a previous pennant. So I would hope that next week we can see something positive for ARGG overall, because the market is risk on. PACB is performing quite weakly, and it has been consolidating during the week. These are all daily charts that you are seeing out here. Then I would like to go and have a look at IDNA, which is a genomics ETF, which has shown a significant weakness. It failed to jump above the diagonal line of resistance in the bullish pennant. So I'm going to adjust this bullish pennant once again and give it a little bit more of a runway, because I'm pretty confident that it's going to go up. It's going to break out of this pennant upwards rather than downwards, because overall genomics seems to be slightly favored, and that's a bit of risk on sentiment in the market since last week. Allogene is down 2.04%, but still on a bullish channel out here. I'm going to look next on IMTX. IMATX is also sharply bullish, and it's also overbought. It needs to cool down a bit. It's still on a bullish track, not too much worried about it. And if you look at Illumina, so I'm going to draw a trend line out here for Illumina, and this trend line has got multiple touch points. I'm going to mark this as a red trend line to show that it was a bear channel in which we were working for the longest time, and we broke out of the bear channel, and right now we are on a bullish channel, in my opinion, when it comes to, let me mark this green, when it comes to Illumina. So I'm bullish on Illumina for the next week. It's got very good MACD, and momentum is also looking good. DNA has gained 0.7%, 3 consecutive days of gain last week, and it's still within a range of consolidation. No action can be done on DNA at this point of time. Momentum is about average, and I think MACD is also quite weak overall. So I wouldn't touch DNA this week. So this is the overall state of the nation when it comes to the genomics. Well, this brings me to the end of the Saturday edition. And I think that the overall week was really good. It's as good as we could have expected. And also we had the Fed coming and talking a bit of dovish Fed talk, which definitely helped us. Also, freight costs are going down. That's also positive. Overall, I couldn't complain much. And we saw a little bit of positive on the genomics sector also. Overall, Nasdaq has also done much better. All the other indices, except for Nasdaq, are clearly seeming to be in a bull market. However, I'm still circumspect about Nasdaq because it's a wider bearish channel in which we are operating. So hopefully next week, Nasdaq would take support from the other indices and continue to pierce through the diagonal line of resistance and get into a bullish channel rather than dragging the other indices along with it on its way back down after failing to break through the resistance on the bearish channel. So those are the two possibilities that we are going to negotiate next week, and I'm rooting for the best for all of us. And when we look at cryptocurrency also, cryptocurrency gained quite a bit. Bitcoin did pretty well. Gold also did recover a lot. So overall, everything is looking good. So with that said, I'll come back to you again tomorrow. I hope you enjoy the weekend and have a good time. And those of you who are taking an extended weekend, going fishing or something, I hope you have a good time. Bye for now.